Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodGroup.com. Welcome back to the show, Hilliard.
Nice to be speaking to you again.
Hilliard, the federal budget comes down April 19th, the first federal budget in 2 years. Is there anything that you'd like to see that could help Canadians trying to find affordable homes?
Well, there's a talk that they're going to put or at least remove the exemption for single-family homes profits. So when somebody sells their home right now, if it's where they live, the residential home, they don't have to pay capital gains tax on that gain. And there was some talk about them thinking about removing it. They would give people a lifetime amount of $250,000 to $500,000, something like that. So basically, you'd use it up. If you lived in Vancouver and you bought 10 years ago, you'd probably already used it up if you sold now. But everything above that would be taxed as income and or as capital gains. I guess probably as capital gains.
Isn't that a 50% tax rate?
No, so basically, say you bought a home in Vancouver a long, long time ago at $200,000, and today it's $1 million. If it was taxed, if it was a stock on the stock market, you'd have an $800,000 gain. You'd have to take half of that as income. Currently, that's the inclusion rate of capital gains. So it'd be $400,000, and then let's say you're in the 50% tax bracket. Make the math easy. You'd have taxes owing of $200,000. So you paid $200,000. You sold for $1 million. You'd have to give the government $200,000. So you'd still have a $600,000 gain after tax, instead of an $800,000 gain after tax. And it seems like that might be coming. I'm kind of surprised that, they're doing it. And the reason I think that just this morning, RBC Economics put out a report, and in that report, they mentioned that it's time for that, they called it a sacred cow or something like that. They said it's time to, remove that sacred cow, which I was surprised because, I didn't think they'd be, usually the bank economists are a little bit more careful making recommendations like that, so that it sounds like. And then the other thing about April 19th, there's many things probably, but the other thing in relation to this topic is changing the inclusion rate on. So capital gains right now, you include half of your gain, whether it's a stock or whatever, any kind of a capital asset, if you sell it. But in the past, it's been 100% inclusion rate and 75% inclusion rate and 66 2/3% inclusion rate. It's moved around. It hasn't been changed for a long time. The last time it's changed was 20 years ago, and that was a reduction from 66 2/3% to 50%. So I could see them putting it back up, and again, maybe giving people a lifetime exemption on the first portion of it as a way of making it a little bit easier for most people to swallow. But if somebody has a $10 million gain on a property or something, should they really get away with having to pay only tax on only half of it? I don't know. It's a question mark. I think we're going to find out on April 19th. I think they're pretty serious about this.
Well, our real estate expert, Ross Kay, points out 70% of adult Canadians own their own home. Could this be a deal breaker with the Liberals? Would Canadians stop voting for them simply because your home, which you always thought would be a store of wealth in your retirement, once you've paid off the mortgage, you can get all kinds of financial instruments through your house's equity. Would that destroy that?
Well, I think it's pretty dangerous politically for sure, but there seems to be something's changed since, about 4 years ago when, before that it was sort of political suicide to talk about not balancing the budget, even though hardly anybody ever balanced the budget, but everybody always promised to balance the budget. And then, Justin Trudeau, got elected after campaigning saying that he wasn't going to balance the budget. He was going to increase the deficit. And, of course he did that. And, he got reelected with a minority government. So it's all of these things that we thought were, off limits are now seem to be back on. And in the U.S., of course, Canada has to follow the U.S. to a large degree. In the U.S., the president, Biden is talking about raising, taxes on, corporations and also on high income Americans above 400,000 a year. So I think people, the sentiment seems to have shifted. So I think the key is to have an exemption up to a fairly generous limit, like 400,000 or whatever the number is. And then the public, probably the voters would be willing to accept that. Because none of these retired people that you're talking about probably have gains in the millions and millions of dollars, but they do have gains in the hundreds of thousands of dollars. So just give them an exemption, and maybe they'll still vote for the party that does it. I don't know. In Alberta, where I live, there's the sales tax, and there's the first time ever a politician in 50 years has mentioned the possibility of a sales tax in Alberta was Jason Kenney recently. And it wasn't that he said that he was going to do a sales tax, but he said, now is not the right time to introduce a sales tax. Well, that's almost like saying you're going to introduce it at some time. It's just not right now. Right? Nobody's ever said it that way before. So, now I don't think anything is off limits anymore. There seems to be a real change happening.
Well, I wonder, why is taxation even necessary on your income? If, for example, Canada gave us a 1-year break from paying income tax, wouldn't that be a great way to boost the country out of recession? People would have all that extra cash to play with.
The reality is that most people, that the people that they need to spend, because the wealthier people don't spend as much as the poorer people. The wealthier people, they invest their money and they, some of the really wealthy people move it into trusts and move it offshore and stuff. So it's really the people that earn $40,000, $50,000, $60,000, $70,000 a year, that do most of the spending. And there's way more people in that category than there is in the $500,000 a year category. So income tax changes don't affect those people very much because their tax rate is quite low, and there's usually a personal exemption anyway. So I'm not that this is going to be for most people not something they think about. But in the 60s and the 70s, there was and it kind of worked. It's going to sound crazy, but the tax rate was much, much higher. For really wealthy people, the tax rate was 90%. But then what they did, so that's, everybody would be really upset about that. But what that allows the government to do is to give exemptions. So if you want people, for example, to invest in mining or oil and gas or something like to make the economy go, put their tax rate at 9%, but then give them 100% write-off for all the money that they put into the particular investment that you want them to do. And that really works because every single person that's in that category is desperately looking for ways to avoid that tax, and they'll do anything. If you give them a little nudge in a direction and say, "Oh, we'll give you a 100% tax write-off if you do this." "Oh, okay. Where do I sign?" Kind of thing. So, I think that when the tax rate was 90%, the Beatles wrote a song about it, didn't they?
Yes, they sure did. And why do you think the Rolling Stones moved to France?
Imagine moving to France to get a lower tax rate. That's amazing.
Yeah, well, in England, now they have a 20% value added tax. When you go to England, don't plan. I thought I would get some really nice shoes on Oxford Street, which is named for Oxfords, and you can buy nice dress shoes. When I saw that tax on it, forget it. You know, I can get nice shoes in Vancouver for 20% less.
Yeah, those taxes work. I mean, they're hard on people, especially if they spend money. But that's the kind of taxes that work. The problem with income taxes is the people that have the highest income, they also have the best tax lawyers to avoid paying it. Right? It's kind of hard to get them to fork it over.
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. I'm speaking with Hilliard MacBeth. Hilliard, have you heard about any wealthy people in Canada, the ultra-rich here, planning to move because they fear what the Trudeau government might do to the Canadian tax regime?
Well, certainly there's talk about it. I don't know if anybody's actually moved, but there certainly is, as we were talking a minute ago, about the possibility of increasing the capital gains tax rate. So, not to go too deep down the rabbit hole about taxes, but in Canada, it's different from the U.S. We don't have a state tax in Canada, but for wealthy people, what happens is on death, you're taxed as if you sold all your assets. And if you have a lot of assets, and you've had them for a long time, then that's a humongous tax bill that your state has to pay. And people, I mean, they're dead. Why would they care, right? But they do care. A lot of them do care a lot. They don't want it to go to the government. They want it to go to their children. And so they look for ways to move their money, or of course, with the Canadian tax law, basically, you have to move yourself as well. You can't just move your money, because then you're still taxable on your worldwide income. So there certainly has been more talk of it recently. I don't know anybody personally that it's actually moved. It's a big deal to move, as people know, especially with COVID. But I asked one wealthy guy I know, I said, if you could move, he said, well, I can't move because of grandchildren, my wife would never let me move. But I said, well, if you could move though, where would you move? And he said, New Zealand. So New Zealand is, and of course, house prices, the only two places in the world where house prices are more expensive than Canada are Australia and New Zealand. And New Zealand being the worst. So I guess everybody wants to move to New Zealand, but I don't even know what their tax rate is there. I understand Costa Rica is very attractive from a tax point of view, and there's quite a Canadian contingent there as well.
A friend of mine has a house there, yes.
And the Grand Cayman Islands has got no income tax. So I was there many years ago. And the company I was with at the time, an investment company, actually had a branch in Grand Cayman Islands, and the manager of the branch was retiring. They were looking for somebody to move there. So I looked at it and I talked to the local people a little bit, and I wasn't really that serious. I didn't get that deep into it, but you know what? They got you because, yeah, there's no income tax. But everything else is super expensive, right? So they've kind of got you a captive. And the other thing that was a little scary about it, I don't know if it's changed, but at that time, you couldn't get couldn't get permanent resident status. So you were always there on a temporary visa. And they admitted one permanent resident per year. And you had to be there a long time and be really good friends with everybody to get invited to be that one person a year that achieved permanent residence. And the problem with that is, if you don't have permanent residence, then they can eject you at any time you want. It's a tricky thing to move. I guess what I'm saying is, it's a tricky thing to move, and most people don't. They think about it, they complain, they talk about it, but in the end, they end up not doing it.
We'll have more with Hilliard MacBeth right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Perhaps this is good news for the Alberta oil patch. A giant cargo ship, 220,000 tons. It's the length of 4 football fields, was stuck in the Suez Canal. 50 ships a day, mostly oil tankers, go through the canal. There's 120 ships that were stopped by the ship that was stuck end to end somehow in the canal. They just freed it, but already we're hearing talk that oil prices are going to boom because of this. Your feelings on it?
Well, so the interesting thing about the oil prices, there's often this probably a short-term thing, but if oil prices surge higher, I was surprised to learn a few years ago that it's something that happens before every recession. So now we're just coming out of a recession. We wouldn't want to go back into another recession. But for example, when the oil price hit the highest price ever, which was $140 a barrel, was 2000 and I think it was 2008, 2007 or 2008, and it was the start of a horrendous recession. And so for some reason, it seems like there's a correlation there. And of course, in North America, we don't get hardly any oil from Saudi Arabia anymore. The Americans have so much of their own oil, and then they get another 3.5 million barrels a day from Canada. So we probably wouldn't have directly be affected, but Europe would be hit really hard. And Europe is, they had a worse recession than North America did, and the recovery is not as good. And now they're going into a third lockdown because of COVID, the new variants. So this is the last thing that Europe needs right now, is to have a spike in the price of oil, because the price of oil, of course, for most people, can't be avoided. So if the oil price goes up, it's like slapping a huge tax on everything, and it could cause a recession.
And of course, we know the world's economy is totally connected. If Africa stops buying a certain product, it affects producers across the planet. So if Europe slows down, does that mean Canadian exports, U.S. exports slow down as well?
Well, one of the biggest connections in the world is Germany and China. It's sort of gone under the radar, and people haven't noticed it. But you think, well, China and U.S. big trading partners, but Germany and China are bigger trading partners than the U.S. and China. So and Germany is going through they're the ones that are trying to go through a third lockdown. Although I guess the announcement that Easter was canceled was met with quite a bit of opposition from the public. But it's it's a difficult situation in Europe. With they were, I think, poised when COVID hit. I think they were poised to lead the world in economic recovery, because they had been struggling for 10 years, and finally things were starting to happen for them. But they now are facing another challenge, and of course they're trying to get off of oil. And with some success. I mean, they've moved really quickly to renewable energy sources for production. France has got almost all their power now comes from nuclear. So Germany is in the process of shutting down their coal plants and maybe shutting down their nuclear plants as well. And of course, England and Scotland have tremendous wind power offshore. But they're still going to need natural gas from Russia. There's a new line that's under construction right now, bringing in a huge amount of natural gas from Russia. So as quickly as we think we're starting to get less dependent on fossil fuel energy. A tanker runs aground in the canal, and the next thing you know, it disrupts the whole world economy.
Yeah, well, 10% of the world's shipping goes through the Suez Canal, 50 ships a day. And like I said, I saw pictures of this thing. You can't believe the size of it. When you see the construction equipment trying to dig it out from the side of the canal, it looks like they're using dinky toys to do it.
Yeah, and shipping is, of course, Texas, until this COVID recession hit, Texas was booming with oil production, and Texas has put ports in where the largest super tankers can land. Right now, up until then, the smaller ships had to take the oil out to the bigger tanker, which was anchored offshore, and shuttle back and forth. And but now they've been building in Texas and maybe Louisiana a couple of these ports where the full tanker, the half a kilometer long tanker, can actually come right into port and get loaded up with oil and then take it in. Shipping, compared to pipelines, ships are much cheaper, and so it's getting. And of course, all of this is happening at the same time that people are saying that we need to get off of fossil fuels and reduce the consumption of. The U.S. alone consumes about 18 million barrels a day, the new administration, the Biden administration, is talking about getting off of fossil fuels by 2050. So China is saying by 2060, and Europe is saying by 2040 or 2050. So who knows what, it's just hard to imagine getting rid of that amount of fossil fuel consumption in just, 30, 40 years. It's going to be very difficult.
And of course, people are keeping their gasoline-powered vehicles much longer than they used to because they're so well built. What happens if you have a classic Chevy or Ford or something, or your F-150 pickup truck from the 60s? How do you gas it up if they ban oil and gas?
Well, yeah, I think there's always going to be, some vehicles left, although the government tomorrow could say, listen, well, there's that program called Cash for Clunkers, where, of course, the guy with the 57 Chevy wouldn't agree it's a clunker, but the Cash for Clunker program, if there were enough electric vehicles available, the government could spend. If deficits no longer matter, which seems to be where we're headed, then the one deficit that the government could incur would be to buy back all of those 10-year-old cars that have probably pretty poor emission controls, and force people, or make it attractive for people, let's say, to buy an electric vehicle. But there just aren't enough electric vehicles. GM is producing almost none. Ford is producing a Mustang right now. Toyota is often I think, my personal opinion, is a unfortunate mistake of going for fuel cell cars. And so Volkswagen last week announced that they are bringing out a huge number of new electric models. I think Volkswagen's got the best chance. They might even bring back that classic van that everybody had in the 60s and the 70s in an electric, battery electric version, and that would sell really well, I think.
The Weinigen?
But Tesla,
the Vanagon, whatever they called it,
produce 1 million vehicles next year, and maybe 2 million vehicles by 2025. They need to produce 20, 30, 40 million electric vehicles per year to replace the fossil fuel cars, and it's hard to imagine.
Well, Hilliard, you're a pioneer in Canada. You're one of the first owners of a Tesla. What's your impression of an electric car?
It works great. The one, so there's two disadvantages, and neither of them are but I hear about them all the time. The two disadvantages are, what about the range? What if I want to go to Vancouver from Edmonton? And the reality is, yes, you do have to stop a couple of times or 3 times for half an hour to an hour each time to recharge the battery. And in the winter, it's worse. So that's the second big concern, is what happens in the winter. And so in the winter, what happens is your battery doesn't do as well because of the cold. So you lose about 40, if it's really cold, like minus 20 or minus 30, you lose about 40% of the range. So my car, the range is 500K, so it would go down to, let's say, 300K. But the reality is that people's bladders don't last much longer than 300K anyway, so you gotta stop. And now they're getting faster and faster on the charging. That's one thing Volkswagen is doing in the U.S. They've got a program called Electrify America. They're putting in 11,000, I think it's 11,000, some huge number of chargers. And then the Biden administration has announced they're going to do an enormous amount of electric charging. So the disadvantages primarily relate to travel outside of your home city and on a road trip. And people don't do those as often as they think they do. And also the winter. And the nice thing about the winter is that the car is warm almost instantly. Like within a minute or two, you can get the car up to 20 degrees Celsius. Unlike a fossil fuel car, it takes maybe half an hour to warm up if it's really cold outside. So the disadvantages are not nearly as bad as they sound, and the advantages are awesome. Like in 5 years now, so I've just at March of 5 years, zero maintenance. I had one issue, and it was covered under warranty. And the guy came to my house and fixed it in my own garage. I didn't even have to take it in. And other than that, it's just putting the windshield washer fluid in, and there's probably a filter I should change or something, but I haven't gotten around to it. So that saves at least $1,000 a year. If you have a Mercedes, it saves $2,000 a year. And then, of course, all the savings from the electricity cost as well, and not worrying about gas stations. You charge at home most of the time and overnight.
And your hands never smell like gasoline after filling up the car.
Yeah, and the other things are amazing acceleration, quiet while you're driving. I mean, there's just a lot of, I think once people realize the advantages, they'll get over their range anxiety. It's primarily range anxiety is the biggest thing holding people back.
Yeah, and, what I found the most when I drove an electric car was the quiet when you stopped at a red light. I could hear all the cars around me, but my car didn't make any noise. Yeah,
and then of course it's kind of fun if you get beside a really hot car, and if you have the ludicrous mode option like I do, you can beat every single one of them off the accelerations. It's kind of fun. I don't do it that often, but summer's here now, so I guess we'll start doing it again a little bit.
Hilliard, thank you so much for chatting with us.
Thank you.
My guest has been Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethmcleodgroup.com. Find him on Twitter at HMACB. If you have any questions for Hilliard or any of our other guests, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at Howe Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.